It was a very successful year, 2024, for the Bilfinger Group, and it will be a successful year for 2025 too. All the figures are double-digit up, cash flow in the sixth quarter constantly positive. We are over the 5% EBITDA target, what we already promised in 2016, so we can't complain.
Where, Thomas, are you seeing the major catalysts?
Actually, we support clients to get more efficient and more sustainable. And it doesn't matter if they grow or if they have to decrease their capacity. We have products to help them to do so. And that actually is at the moment quite a nice spot in such a volatile global market.
In two ways, I guess. One, the fact that the price of hydrocarbons remains under pressure. Two, margins in petrochemicals and chemicals more generally also under pressure. And at the same time, questions being raised about the pace of energy transition as well. These are bigger factors, but how are they playing into your numbers, Thomas?
They actually play in that way in that most of our clients with the existing assets are trying to improve them. Energy efficiency improvement, sustainability improvement, educate based on labor shortage, educational improvement, all these things where we as Bilfinger actually can support our clients. And that pays off.
Yeah, I mean, just in terms of the geographical breakdown as well, of course, there appears to be a growing schism, I think it's fair to say, between the approach of Europe to its energy needs and that of other parts of the world, namely the United States as well. How are you playing those different markets, Thomas?
You are completely right. We have to look into the different areas in the world with a different local strategy. In the US, we see quite a lot of investments coming, more what we call the established energy supply, oil, gas, LNG. And in the Middle East, similar, but with more trend to the green, to the sustainable energy part. In Europe, it's an absolute mixed picture. We have Germany in that so-called energy transition, which really didn't take off that well, where we think that the new German government will take some steps back to secure a lower energy cost level for the German industry and especially for the German citizens. That in all will deliver for the European citizens and industry a lower energy level too, energy cost level too.
It's fascinating, isn't it? And you and I talked a little bit off camera, but given everything that's going on tariff concerns and trade policy stateside and how it affects Europe, plus you've got a new commission which has promised to inject vigour into the European economy, plus you've got, as you just mentioned there, Friedrich Merz coming in as well. I can't help thinking that the stars are aligning for greater investment and greater capital spending in Germany and broader Europe as well. If we don't seize this opportunity, well, then we're never going to seize it as well. Do you think we will?
We definitely will. And it will be a good time. I know it's a big time of concern. We had just yesterday here an attack in Mannheim with 2 people killed by a car. There's a lot of uncertainty in all societies, not only in Europe, not only in North America. Now it's the time to step up and to do the things which are announced. And I think in Europe, we have a good potential to go positive, which means if the politicians across Europe, especially in Germany, the new government is investing into infrastructure, into defense, into education of the people, in really more working time in Germany too, which means labor work is paying off better than before, then Europe will grow in such a difficult time.